This podcast will be looking at analysing financial information and in particular looking at what is called a return on investment percentage. Now this financial indicator looks at two financial statements, both the statement of financial position and also the statement of profit or loss. Now let's start with the accounting joke of the day. Why did the accountant stare at his glass of juice for 3 hours? Because on the box it said concentrate. Now, before we actually get into analysing the financial indicator called return on investment, we're going to look at two NBA superstars and we're going to compare these two basketball players. So I'm going to put on two YouTube clips, and what I want you to do is watch those clips and determine which is the better player, Michael Jordan or Mr. Curran lookalike.
Cartwright comes into Horace Grant.
Now they press. Now the Bulls got to get it up.
A lob pass to Paxson. A jump pass to Jordan off to the left. Michael double teamed on the drive in from the left. Gets chased into the corner. Comes right back. Through the foul. Wow.
Oh, powerhouse, JD.
There's a poster play, folks.
Game to a halt as Barnes fouls Pirtle here. And sometimes it also takes the team that is fouling out of its offensive
Exactly.
rhythm.
So you just look there when Derek White tried to throw that shot up there. There's 21 seconds left on the shot clock. So the Kings, they're taking a gamble here, but one that probably plays in their hands unless Jakob can continue to knock down free throws.
And picture tells the story, unfortunately, on that one. So Jakob, 1-1 last time.
Was blustery out there today.
It was. That headwind is still there, apparently.
And the winner is, what? Michael Jordan? You serious? We may have to analyse the career stats on Michael Jordan and Mr. Curran lookalike. Let's get into those stats right now. Now, as you can see here, in comparing the two players, the statistics are very, very close. Mr. Curran lookalike is averaging a very impressive 6.2 points per game, 5 rebounds, 1 assist and 1 block. Very, very close to Michael Jordan's 30 points per game, 6 rebounds and 5 assists. Now, if you actually look at return on investment between two forms of investment, you can actually use that tool to determine which is the better investment in terms of generating cash flow and also profitability for your portfolio. So in essence, when comparing like or different forms of investment, you can use this financial tool to determine which one is the better form for you. Personally, I think Mr. Curran lookalike got a bit stiffed here in the comparison, but statistics don't lie. So return on investment is a rate of return a business actually gets on the cash it invests in itself every year. So in other words, it is percentage return for investing into that company. Now, when you're looking at what is a strong return on investment, the first thing that you need to look at is the 10% yardstick which financial analysts have used to determine whether that is a strong investment return or not. So if you look at the current economic times, if you invest in shares at the moment, you're going to get about 5 to 7% return, as opposed to keeping your money in a bank, which will give you a 0.9% return. So in other words, you're going to choose the investment which has a highest return on investment, because that will give you the biggest cash flow and also give you a capital growth over time. The return on investment should be holding steady or going up over time, and that obviously needs to be compared against a number of years. And the return on owner's investment should be greater than other forms of investment, and for your exam we are going to compare it against the S&P 500 or the Australian Stock Exchange. So you can actually invest in the Australian Stock Exchange itself or invest into various other public companies, for example Rio Tinto, BHP, Commonwealth Bank, or any other form of public trading company in Australia. Now, for this exam, you are going to look at what is influencing the return on a business. So in other words, you're going to look for relationships. Now, the things which influence the increase or decrease on the return on investment, first of all, is the profitability of the business. All right, and then when you're looking at the profitability of the business, as per the last podcast, profitability is determined or influenced by a number of expenses going up or down in the statement of profit and loss, and those obviously will have a negative effect on profitability and also cash flow. So your answer firstly will have one or two sentences on the trends of both forms of investments, and then you're going to analyze what is having a influence on the trend either going up or down for that form of investment. And the first thing that you need to obviously look at is the profitability. So if the net profits of that business is going up, you will safely assume that the return on investment will also be going up as well. Okay, so you need to look at whether the business is profitable and whether that profit is increasing over time, and document and discuss what is influencing that net profit in the form of expenses or decrease in sales. The next thing that you need to obviously look at in terms of your paragraph structure is the issue and implications. So what does it actually mean if the return on investment is going up or down? So if you're looking at a lowering return on investment, it means that the investor will receive a lower cash flow in the form of either drawings from the business itself or a lower dividend income stream for the investor if they are investing in a public company itself. So your exam will be looking at investing in a business or investing in a public company itself. So you need to look at what is actually happening with each of those return on investment and tell the investor what that actual decrease or increase means for them. Now, the other thing which you obviously need to look at is both forms of investment have a high volatility, and that basically means that they are influenced by outside forces. So for shares, for example, and in particular public trading companies, the Australian Stock Exchange is heavily influenced by what happens in the United States and also in China as well. But for the exam, you're going to concentrate on this one here, the profitability of the business itself. Now we're going to be analyzing two financial statements, one being a public company and the other one being a small business, and they're actually set out quite differently, and I've highlighted to you here two things that you need to look for when analyzing the return on investment. The first thing is its sales, and as you can see here, this public company is sales are increasing over time, which is a very important outcome for the business and one that is very positive. Now, the other thing which you need to look at is what is actually happening with the net profit for the year, because the net profit has a strong influence on whether the return on investment percentage is going up or down. And as you can see here, the net profit has gone down from 13.9 all the way down to 6.9 million, and then increased back up to 10.4 million. Now you as a financial accountant will obviously analyze and determine what is causing this slight drop in net profit percentage. And the reason being is that the operating costs are actually increasing over time, in particular from 2018 to 2019, and then had a slight drop in 2020 here. All right, and that's obviously had a big impact on the net profit itself. And you would document that in your answer. And then if we actually look at the return on investment for the 3 years, you can see here that the 2018 was the best year of 30.86%, which is a huge return on your investment. And that is primarily due to the huge profit that they actually had in 2018. And in 2019, it had a big drop to 19%, and that is caused by the huge drop in net profit, and that was caused by the decrease in sales and also the increase in expenses. And then it's gone up again in 2022, 22.31%, primarily due to the increase in sales. And they've got their operating costs under control a little bit better than 2019. So if you're comparing this 22% to the other form of investment, which we'll look at quite closely, you will see here that this one far outweighs the small business return on investment, which we'll look at now. Now, what we are going to look at is what is actually happening with the small business My Lush seed. Now, we can see here that the sales are increasing from 2020 to 2021, which is very good for the business. So that shows that it's actually growing, and it has an increase in net profit from $1,500 to $2,377. Now you actually look at and compare the two, and you'd say, why would you invest in a business that's only producing a profit of $2,300 as opposed to Rio Tinto, which is operating a net profit of approximately $10 million? Well, we're not actually looking at the financial figures itself. We are looking at what is the return for investing into either one of these businesses. And as you can see here, My Lush seed is returning a 3% as opposed to Rio Tinto's around 20-21%. So you can see here that Rio Tinto has a better return on investment of around 3%. If you compare it to the ASX 200 returns, you can see that the Rio Tinto is just below that of about 1%, but the small business My Lush seed is generating only a 3%, which is a huge difference of 20% if you compare it to the ASX Australian Stock Exchange. So what we're going to do now is to look at the structure of your response for your exam. And I would recommend that you actually use this structure, and because it actually ticks all the characteristics for the analysis and also the evaluation objective for accounting. So My Lush seed return on investment has increased from the previous years from 3.3% to 3.96%, primarily due to the improving profits from 2020 with a variance analysis of a positive $877. So your first sentence is obviously comparing the trends between the two organizations. These are positive signs for the business. However, when comparing the Rio Tinto, it has a much larger return on investment of 19.02%, despite its decline from the previous years. So your first sentence or your first two sentences is comparing the ROI between the two businesses. And then the next part of your response is looking at the relationships between the return on investment of the two organizations. So further positives for Rio Tinto include its declining operating expenses. So that shows the relationship between the increase from the previous year, and thus provides the investor with a great opportunity for cash flow through high dividends. So you're telling me what is the implication of having this good return on investment. When comparing the return for both investment opportunities, both ROIs are below the ASX 200, in other words the Australian Stock Exchange, and thus demonstrates better investment opportunities outside of said companies. So then you're comparing the two ROIs against another form of investment. But the exam will obviously want you to recommend which business to invest in. And in this case, whether it is better to invest in the small business My Lush Seed or Rio Tinto. And so now comes the justification of your evaluation. However, if you had to choose between the two investment options, Rio Tinto far outweighs My Lush Seed. So in other words, you're providing a recommendation, and here is your justification. Due to its superior ability to generate future cash flow in the form of dividends and capital growth. So dividends is basically what you actually receive from investing into a public company. So if you compare dividends to, say, for example, investing your money into a bank, you will get interest from the bank for investing into that bank. Same thing with a public company. Instead of interest, you get dividends every 6 months. And also you get capital growth. So that is the movement in the share price over a period of time. So what this answer is also looking at is analyzing the two. What is the relationship between ROI and within the financial statements, and then providing a recommendation which is justified. And I've just provided here a structure on how to actually break down your answer. So your first step when looking at one of these responses is to identify the trend. And as you can see here, I've given the movement between the ROIs for the both organizations. The next step, what is the relationship between ROI and the financial statements? And the key relationship is obviously the movement in net profit, and why is the net profit moving between financial years. And usually it's either increase or decrease in sales or declining or increasing operating expenses. And then evaluate the figures and provide a justified recommendation. So in the exam, you're going to have to tell the marker which is the better form of investment. So in other words, looking at the ROI, and also provide a justified reason. So in other words, which investment will provide the greatest cash flow? And in the case, if it's a public company, that will be cash flow in the form of dividends and capital growth. If it is a small business, that will be in form of drawings coming out of the business, because as a small business owner, you can actually take the profits out for yourself. And this concludes the vodcast on how to actually analyze return on investment. Our next vodcast will be looking at how to actually calculate the purchase price of a business, and that will be used to analyze whether the book value of that business is greater, equal to, or less than the market value of the actual business itself.